I'm so glad you asked me to do this. I think this is a topic I wish I was a little bit more informed about, and I know that you guys have been on top of it, and you are incredibly detail oriented. So, so the SEC has issued a proposal to improve the consolidated tape, and we're going to call it the SIP throughout this conversation. How would you summarize it?
Well, Brian, I'm very sorry I have to pretend to explain that to you. I'm sure you know it much better than I do. You know, essentially, there are two linked proposals at play. There's one that's the order amending the governance structure of the NMS plan for the consolidated market data. And then there's another one which is as far only a proposal, and that's the market data infrastructure proposal. And that would establish competing consolidators, increase the data in the SIP. It would do a lot of different things. And all those things I think are great. But let's go into a bit more detail. The governance, that's about changing the balance of power between the exchanges and the rest of the world. And that's really important because the fees for the SIP are decided by this governance committee. And that's the way they're charged and the way they're apportioned and paid back to the exchanges. And that's a key part of that whole change. Because there's an inherent conflict of interest between the exchanges that essentially set the fee for the SIPs and produce competing content to the SIP with their prop feeds. So they're on both sides of it. They sell you a SIP, which they're not trying to make better, and they also sell you the prop feeds that you have to use if you want to trade. So the first bit, which is about the governance, really is key. Now, the governance isn't sufficient alone. You need to improve the content. And today the SIP is only about the best bid and offer and some regulatory messages, but it's not enough really. So the SEC is proposing to enhance that to 5-level deep. And the SEC is also changing the way you show the odd lots. And odd lots are really interesting because odd lots have doubled in size in the past 8 years. They now make half the trades and about 5% of the volume. So odd lots, you can't just ignore them. They're really important to understanding how trading goes on. So the SEC is doing that on content, and they're also adding auction data on top of it. So it's really a big overhaul of what content is going to be. But content itself really is not enough because you need to get that content quickly. And the SEC
in a competitive way.
Yeah, exactly, in a competitive way. So you need people to race, essentially, for that to be delivered well. And the SEC is introducing competition in the formation and delivery of the new SIP. And yeah, that's good. You're a market guy. You like competition, don't you? And I like running.
We all like markets for you, but not for me. But no, I actually do like markets in all contexts.
So there'll be some level of competition, and there'll be competing consolidators, and the raw data that the competing consolidators will have to be as fast as the prop feeds. So that's another key point. Not only will you have competing consolidators that can race, but their input will be very fast. That's, I would say it's great.
Well, we'll definitely talk more about speed, latency, and its the geographic issues, of which McKay is quite expert.
And Brian, given what I summarized, do you think the SEC is getting this right?
Well, so it's interesting. As I talk to people in the industry and as I look at it, I think that they are absolutely right to be focused on it, and they've identified a lot of important issues. I feel like almost everyone I've spoken to has a lot of things that they like about the proposal and some things that they think could be improved. So, I have I have a little bit of concern about some of what I've seen about how the content is going to be produced. I think I would be open to more experimentation and more freedom into how it is presented. I think the odd lot proposal has a couple areas that need tweaking to make it clear, because while they are showing odd lots, they're not proposing adding them to the NBBO. And so this adds a little bit of complexity. I would say I do sympathize a lot with the exchange's position of where they're coming from. And there's even some things that I think the major exchange groups would like to see in terms of reform that would reduce some of the payments that go to very minor exchanges. I would certainly personally like to see a world where the exchanges feel more of an incentive to pull their liquidity together instead of running 4 or 5 nearly identical platforms with modest fee differences and such. So the SIP today, it is good as a common point of discussion. I don't know how much it informs trading. It is, I guess, the unique source of information for some things, TRF trades and such, but the vast majority of professional firms, I think, are focused on proprietary feeds and view the SIP as something of an extra cost, um, especially for the unique information that it does hold. I know that the exchanges and some commenters have said that the competing consolidator model would be too complex and favor the status quo, that the competition would be confusing for some people. Do you have an opinion about that?
Well, so let me go back to something you said, which I thought was really interesting. You said that the current way the SIP operates is one of the reasons behind the high fragmentation of the markets today. So
Yeah, yeah,
exchanges
I
operate
did allude to that.
individual segments because they get more revenue that way. How does that work?
Well, when the SIP formula is decided, it's a mixture of trading activity, quoting activity, and there are different incentives based on how liquid a stock is. But the net effect means that for exchanges to accrue a portion of that pool, they want to have a significant amount of quoting activity, and having an extra quote gets you a fairly reasonable slice of that. So there's an incentive for a firm like one of the major exchange groups to run multiple platforms, even though you would think that the network effects of liquidity would want them to aggregate everybody in one place. They have this incentive to almost compete with themselves and run multiple platforms. And I feel like that is gotten to a point where it is maybe distortive, and it has also incentivized further fragmentation and additional exchanges. Certainly is no lack of people launching US equity exchanges these days.
Well, yes, indeed. And are you not on the board of one of those?
I may be,
Full
but
disclosure.
I think there are a lot of reasons, good and bad, for exchanges to launch, and I think that there certainly is room for experimentation and improvement. Although our existing exchange groups also do an excellent job within the constraints that they operate. But one complaint that I think we can all sort of agree on is the cost of the SIP, the complexity of reporting, market data audits that one has to deal with. Do you think that this is really going to address that?
Well, so that's a good point. I I have no idea. I think there's a sliver of hope, maybe, because essentially that rests with the governance committee. And if we go back to the formula that you described, that's also decided by the governance committee. So they could decide to stop self-inflicting pain and having a completely skewed way of allocating revenue. They could just decide to allocate revenue based on trade size and remove the other things. So, but back to your question, really, I think that there's a good chance that this is going to be solved. And the reason is that in the new governance, there will be 1/3 of voting power to non-exchange, non-SRO members. And also, the rules and the fees will need to be filed. There will be open public comments to the rule filings, and then the SEC will decide to agree with the rule filings. So instead of just, the committee decides, and goes into effect, the new way of doing things will put a lot more focus on making sure the fees are, you know, reasonable.
Interesting. I've read a bit of the history on the SIP, and I do know that the original market data allocation formula was based on the number of trades, irrespective of size, which, as you can imagine, has also some bad incentives. But that formula was put in place, I think, in the 70s at the behest of somebody in the industry as a way to incentivize smaller exchanges where there was one very large dominant exchange, and this was actually something of a subsidy to smaller exchanges. But over time, evolved in such a way that it became maybe distortive itself. So I'm sympathetic to the changes that were made, I think around 04, 05, to include quoting traffic, but I'm not sure that the results have been ideal. So I think in thinking about it, there's other information that other uses of this information that is restricted and difficult. I know academics would like to get access to it. Historical information. Do you think that this governance proposal will affect those kinds of redistribution rights?
I think there's a good chance. Today, the redistribution rights, as you said, are very complex. The threat of audits is very real. And I think exchanges come and audit big dealers very often and levy heavy kind of extra fees after the audits, in part because it's very complex, the way the licenses are made. In the future, the new governance committee could change that. And I think there'll be pressure on the committee to change that. So I believe that, and the fact that historical data could be available to, not just academics, like to the public at large. There's a very bizarre thing today. In everybody's mind, 15-minute delayed data is free. If asked, and I think most people would say that, when in fact, I don't think that's quite true. Like, it's free sometimes for some people and, for some use. But if it were really free, you could just collect it and then store it and sell historical data free of charge. So the fact that you can't do that is a good proof that it's not free.
Right.
Maybe it
So
will be.
definitely implications outside of real-time data, but for those of us who are dealing with real-time latency, and the latency of the SIP is a factor that comes up. Let's talk about a bit about that. How do you think about latency and with the SIP generally and with this proposal broadly?
Well, so latency today. So there's a first. Let's look at what the proposal says. It says essentially that the component of the SIP, the things that the exchanges have to send to competing consolidators, has to be as fast as the prop feeds. Okay, that's great. Now, is that going to be sufficient? Is that even doable, you think?
Well, I think certainly if we have two feeds carrying different data, in the limit, they're not going to be coming out at the exact same latency. And I think there is a lot of room to make choices about which data you prioritize that could convey important latency sensitive market moving information differently between the feeds. So I think this is a really challenging thing to get right.
So you kind of alluding to the trade summary messages that, for instance, the CME is sending, where you really get all the information before you get the granular trades?
Yes, I mean, there's just some clear and simple differences in terms of compression and choice of format that could make a difference. But the content one is the one that really is interesting. On some other platforms, and you mentioned the CME, they will give an interesting bit of texture that, when an order comes in that interacts and intersects with a large number of orders on the opposite side, we have a tendency to report each of those individual trades. The CME knows that what is perhaps more interesting is that a large transaction occurred. And so they report that a large transaction has happened, this total number of contracts at this price level, and then they give the individual executions that happened. and the vast majority of the impact and the information content is really coming in that summary. So if the rule basically says you have to give out the trades, but you have the option of giving these kinds of summaries, you obviously can kind of make one feed carry more timely information or more important information and hence be more valuable than another. And this seems like a very, very hard thing in the limit to really get right.
That's very hard to understand, I must say. Let me restate that
Okay.
just to make sure I'm getting it right. So the SEC says, you have to send the trade information to the competing consolidators as fast or faster than you send it to the prop feeds. Okay, that's great. Uh, and then you say, yeah, but the trade information may not be the market moving information. And the market moving information may be sent without sending any trade information. So you could first send the market moving information to the prop feed. That's the thing that has value. Then you send the trades to the SIP, and then you send the trades to the prop feed. So you've essentially still kept all the value in the prop feed, but you've obeyed by the rule, by the letter of the rule, I guess.
Yep. Yep. It's possible, and there may be some small things around the edges that people do like that, but there is also the issue where even if you're receiving it at the same time, a competing consolidator has to perform some non-zero amount of work to aggregate and republish this feed.
Yes,
So
so
it's going to
I
be very,
agree.
very hard to have the feed be exactly as fast. Is it hopeless? Will the consolidators be able to add value at all? What do you think?
Well, I think, as you said, like at least we can compete if I include myself as a competing consolidator. So I can process the exchange feeds very quickly. So I'll be late, okay, but I'll be late by only single digit microseconds. That's totally doable. Now, today, when you get the SIP, you're really late by a lot more than that. Because if you think of the tape C, which is NASDAQ listed securities, and suppose that you trade in MAWA and you want to get the SIP uh, for the quotes on the NYSE exchange. So for NASDAQ listed securities on NYSE exchange, those quotes start from NYSE, go to Carteret, are processed by NASDAQ, then they're included in the SIP, they're shipped back to NYSE, and then you get them. So by the time you get them, they're totally stale. So the SIP information for NASDAQ listed securities that you listen to at NYSE is really stale. So that is inherent to the way the SIP is built, and this we can overcome.
Yep, we can overcome this with competing consolidators. The exchanges could overcome it with some distributed SIP proposals, but there's definitely an issue there in terms of making the SIP truly competitive and substitutable for proprietary feeds. Going back to the point on proprietary feeds, I think in some of our previous discussions you pointed out that the commission did anticipate some of the, I don't want to say gamesmanship, but some of the potential problems in terms of how it's interpreted what gets published. Can you speak
So
to that?
yeah, totally. So essentially the commission says that the competing consolidators can have either slimmed down version of the new SIP with only a BBO, which would presumably be cheaper, or enhanced version of the SIP with maybe the debt to book and everything. So if they envision that, it's obvious that they envision that competing consolidators can build the SIP with the prop feeds because you need that to build debt to book. So if the minute you think about this, you say, okay, like suppose you have a trade summary message, maybe the competing consolidator will be able to include it in the SIP. So all these gamesmanship that we think about, maybe the SEC was super wise and just decided to let the competing consolidators choose what to include. And that's
Yeah,
the
because they'll
answer.
have their own motivations to make the feed attractive. What about cost? Cost of always getting the fastest data. How is that going to be managed and controlled?
Well, thanks for the question. So the
Seems
issue of
like your problem to solve. So
yeah, I got to do that. So so the cost is today. I think the in the SIP document that the SEC put forward, the Market Data Infrastructure Proposal, they analyzed the cost of the SIP, and I think I quote from memory, but in 2017, the total SIP revenue were 430 million. And if you look at what the cost is to produce that, NASDAQ and NYSE each run a bit of it, and they charge between themselves less than 20 million. So, FINRA has to do some job to operate the TRFs. But if you look at those numbers, it should be obvious that the cost of producing the SIP is less than 10% of the cost of the revenue of the SIP. So that is the real cost of the SIP. Will that change? As we said, that sits with the governance committee, and I believe there's a good chance it will change. But if it doesn't change, like the SIP is still going to be expensive.
yeah.
Now, competing consolidators will have to add a margin on top of that. So that's going to be tough. So they will be really driven to have a much better product if they stand a chance to compete.
And there may be a menu of choices, but best execution, will be something that I guess each firm will have to think about. It does have complexity, as some of the participants have thought about, but I think on balance it's warranted, and the firms are well situated to make those kinds of choices. And I do want to say that even with the cost that you mentioned, the exchange groups that do operate SIPs today have made great improvements and have, in the recent couple of years, invested heavily in sort of modernizing the SIP infrastructure. And so they have improved it quite a ways, but some of these other issues of content, the lack of a distributed SIP, et cetera, remain things that sort of need to be addressed, along with some of the governance to help steer it in the right direction going forward. So as you mentioned, a competing consolidator has to do all this, and he's not wholly altruistic. He has to mark this up. Can the SIP still be affordable and competitive at the end of the day?
Well, I think the answer is yes. I'm very optimistic, but I think the thing is you have to contrast the situation today, where the SIP is both expensive and not very useful. It's mandatory, expensive, and not very useful. So tomorrow, it will still be mandatory. Will it be useful? It depends on competing consolidators' way of adding value to it, but I believe it will be. And will it still be very expensive? If the governance committee reduces the fees or makes them, closer to the cost of production, I think they could even be cheaper, and so leave room for margin for the competing consolidators.
I wonder if there'll be a menu of options. I think one of the things that makes subscribing to the SIP almost compulsory, even if you do a good job of stitching together all of the proprietary feeds, getting VBO information, there's still a lot of regulatory information that the commission recognizes: limit up, limit down, different forms of halts, market-wide circuit breakers, et cetera, that you still need to receive. Will competing consolidators be able to offer that? Will they be able to offer a menu where I may be doing some consolidation myself, but then focusing on a consolidator for this regulatory information?
That is a very interesting question. So let me rephrase it so that I make sure I understand. You were saying, me, Brian, I can do the consolidated book better than you can. So don't
Or,
bother me
or,
with it.
or it's
I'm not,
natural.
I'm
I'm
not,
doing it for my own proprietary trading, and my compliance would like me to use those same feeds, as is the guidance in handling customer orders. But it's not complete. I'm still missing some things.
exactly, but you'd like me to send you the rest, the thing that you don't get access to, the limit up, limit down. I think that's a great suggestion. So part of the issue there is who's going to decide whether that's doable. And you would think that it's the governance committee. So one of the suggestions I think we'll have in that proposal is that those new types of services should be, at least proposed by competing consolidators and then analyzed and responded to by the governance committee, so that the governance committee could be essentially be put a question as to whether we can introduce those new products, and then have to respond with some kind of rationale. But that's a great idea.
Well, I hope to see it. I hope to see it. And I think there's a lot of room for McKay to get involved in this proposal. And I think you guys have certainly a lot of experience at solving some of the geographic issues that that we've talked about. So I'm kind of out of questions and comments. I don't know if you have anything else that that you think that this is a big proposal. It's probably going to continue to change. So certainly worth staying on top of. But I appreciate some of what I learned in our discussion about it, and I feel a little bit